Hi everybody, this is Mike Klinger, and I want to talk to you this morning about how Social Security looks at self-employment when somebody is on SSI, or Supplemental Security Income. This is the first of a two-part webinar series. I'm going to do this webinar on SSI, and next month I'm going to do one on SSDI. And the reason why I wanted to do a series of trainings for the WISAs and VR counselors alike is because I've been getting a lot of questions lately about how Social Security looks at income when somebody is self-employed versus how they look at income when somebody is an employee working for somebody else. So today I'm going to talk a little bit about how Social Security calculates income in a self-employment case and how it impacts the SSI check and the Medicaid that a person receives. And with it being summer, it's always harder to get people to attend live trainings because people are on leave and things of that nature. So I thought it would be easier to just do an archive webinar that people can listen to on their own time. And as always, you're willing to email me or call me later with questions. So the first thing I wanted to talk to you about is how Social Security looks at income when somebody is self-employed versus if they were an employee working for somebody else. And as you all know, if you've been around for a long time, when somebody is an employee, Social Security always looks at the amount of the gross wages that a person receives in a month, and that income is used to calculate what the person's SSI check would be, typically 2 months later after they first receive that income. With self-employment, it's a lot different. With self-employment, instead of using the gross amount of wages that a person receives, Social Security will actually look at the average monthly net earnings from self-employment when determining how that income is going to impact the SSI check. So the biggest difference in a self-employment case versus an employee is that instead of looking at the gross amount of wages that a person receives in a month, Social Security is actually going to use the net earnings from self-employment in that income calculation. And on the next slide, I'll talk to you a little bit about how they determine net income. So when Social Security looks at how to determine net income from self-employment for an SSI self-employment case, they look at a couple different things. Number one, the net earnings from self-employment, or NESE, is determined on a taxable year basis. So in other words, they're looking at what the person's projected income is going to be for the whole year. The annual net earnings from self-employment is used to determine the monthly earnings. And SSI always divides the net earnings from self-employment by 12 months in the year, and that's true regardless of when the business started. That's true even if the business did not operate for an entire year. It's a seasonal business. An example of that would be somebody who mows lawns and does landscaping in the summer and then closes the business down in the fall. Or the business ceased operations prior to the person applying for SSI, but they had income in the past that needs to be used to calculate that SSI check. So regardless of when the business starts, whether the person works all year round, or whether the business is already closed when a person applies for SSI, in SSI cases, Social Security is always going to look at the projected earnings for the whole year, regardless of how many months of the year that a client actually works. So the monthly earnings for self-employment is always the starting point for the basic SSI income calculation. And I know that's probably very confusing, so on the next slide I'm going to give you an example of how it works and kind of break it down step by step. As an example, I've given you the scenario of Ellen, and Ellen comes to see you in June. So let's say it's June 2023, and she has recently opened a web design company and projects to make $8,000 in net profit for the year. Okay, so this is an example where the client hasn't worked all year round. Say she's going to start her business at the end of June, and she projects that she's going to make $8,000 for the year. What's complicated and difficult in self-employment cases is that because clients aren't going to know exactly what they're going to make from month to month, and because they don't have a pay stub like they would if they were a regular employee, they have to kind of project when they start the business how much they're going to make. And that can get complicated in terms of underpayments and overpayments. I'll go through that a little bit later. But she knows that she needs to report her income to SSI, but she's not sure of what she needs to tell them since her profits may vary from month to month. Okay, so your job as the WISA is to kind of go through some of the self-employment work rules with her and explain to her, based on her projected annual profit for the year, how Social Security is going to determine how her income every month is going to impact the SSI. So let's kind of break it down step by step. So up to this point, Ellen has been receiving the full benefit amount of SSI. So this year is obviously she's getting $914 a month because she's had no other income up until now. And she has questions about what's going to happen to her SSI check now that she's running the business. So she's going to ask you a couple things. And as the WISA, this is your job to determine is how much in countable monthly income would she have if she assumed a profit of $8,000 for the year? How much SSI should she have received from January through May when she had no income? And how much would she receive now from June to December now that she does have a business? So these are the questions that we're going to look at as we're breaking down this example scenario. The first thing that Ellen's going to want to do is to report her projected net annual profits to her local Social Security office now that she's expecting to be self-employed. And the best way to do that is to fill out the SSA Form 820. That's the work activity report for a self-employed person. And it's really hard when a person first starts a business because obviously they don't have a pay stub like an employee would to show their monthly earnings, and they don't have any profit and loss statements yet or tax returns to show what their profit was. And so all that a client can really do when they first start a business is to project how much in profits they expect to make and deal with overpayments and underpayments later. And I'll get into that in a little bit. But on the 820 form, there's going to be spaces for a client to write down what they expect their net profits are going to be in every month. Okay, and it'll ask for things like out-of-pocket and payment-related work expenses, and whether she's putting any of the money that she's making into a PASS plan. All the work incentives that apply to a person who is on a site and an employee also apply to a self-employed person. So if she had any out-of-pocket costs for things like medications to control her conditions or her disabilities, if she was paying out-of-pocket for transportation, anything that could be considered an IRB would be put down on the form and deducted from her accountable profits. Likewise, if she was using a PASS plan to pay for any business expenses, there's places on the 820 form where she could detail things like that, and the amount of money that she was putting aside into the PASS wouldn't count against her SSI either. So in that way, self-employment earnings and employment earnings are counted the same as Social Security would look at things like out-of-pocket expenses she has for IRBs or PASS plans or things of that nature. Okay. Where the difference comes in is prior to the standard formula that everybody's aware of, the minus 20 of unearned income, minus 65 of wages divided by 2. When somebody is self-employed, there's an extra step that Social Security takes in determining how much income is countable. There's an extra deduction. Okay. So the first thing that Social Security is going to do when she sends that work activity report in saying, I expect to be making $8,000 this year, is to identify how much her annual earnings are after deductions. Okay. So what they're going to do is they're going to take that $8,000 she put down in her form as her estimated annual net profit and multiply that by 0.9235. Okay, that's a standard deduction that everybody who's self-employed gets. Look at it similar to the standard deduction that a person would get on their taxes every year. When somebody is self-employed, Social Security is always going to take that annual profit that the person's projected and multiply that by the 0.9235 deduction to calculate what the annual net earnings from self-employment is. Okay, so not the entire $8,000 that you projected is going to count against her SSI every month. Only the remainder after the deduction is applied is what gets deducted from her SSI. Okay. Now, obviously, they're not going to take the earnings that she projected and subtract that from the SSI check in just 1 month. What they're going to do is they're going to divide that number up within the year to determine how much in her countable income should count against that SSI check monthly. Okay. So after they determine what her annual net earnings from self-employment are after the deduction, what they're going to do is take that figure, that remainder, and divide by 12 months in the year. And remember, it's always the net earnings from self-employment in an SSI case is always deducted up within 12 months, regardless of whether or not the client has worked for the entire year. Okay. So using this example, the remaining NESE is $73.88. What Social Security is going to do to calculate what's left monthly is take the annual remainder of $73.88 and divide by 12 months. That leaves $616. Okay. What that means is that $616 is the monthly net income from self-employment that she's projected after Social Security does all the deductions, and the $616 per month is what's going to count against her SSI check monthly. Okay. Now on the next slide, I'll show you how they come up with the rest of the calculation. This next slide should look very familiar to everyone, because once the net earnings from self-employment is calculated, that's kind of where the differences between a self-employed person and an employee stop. Once Social Security gets to the next step to determine the total countable income that's deducted from that SSI check, they treat the self-employed person just like they would an employee going forward in terms of what deductions they apply after that. Okay. So this next section, these next steps should look very familiar to everyone. What they're going to do is they're going to take the earned income, which is the net earnings from self-employment that we calculated on the last slide. Remember, it's the projected annual earnings for the year multiplied by the deduction divided by 12 to come up with the monthly NESE. And then from that, they're going to apply all the standard deductions that we're all familiar with. So from that comes the student earned income exclusion if the client has that. And for the purposes of this, I made it simple. I said she's not a student, she's not under age 22, so no SEIE. Okay. What's the next step? We're all familiar with that, is to determine countable unearned income. She doesn't have any in this case. All she's got is the projected annual earnings from her self-employed job. So they take the $20 disregard off. It doesn't count against the SSI check. And then the standard 65 earned income exclusion comes off that we're all familiar with. And for simplicity's sake for the calculation, I didn't say that she had any IRWs, but going back to what I said on the previous slide, if she had any out-of-pocket expenses for medications or transportation or anything else that was disability related or work related that she paid for out of pocket that she couldn't work without, any of those things, any of those IRWs would also be deducted from her NESE, okay? But for the purposes of this example, she doesn't have any. Once you take the 616 minus 20 minus 65, that leaves $531. And as you all know, Social Security always divides the countable income by half, okay? So the very last step would be to, after the $65 deduction and $25 deduction, divide by 2 to come up with what the total earned income is for the month. That would count against the SSI check, okay? So everybody's familiar with that formula. That shouldn't be any different or new to anybody. So the next step is something that everybody should be familiar with. What Social Security is going to do is take that monthly countable earned income that we determined. Remember, it's projected annual profits multiplied by the standard deduction, and that remainder is divided by 12 to determine how much NESC there is every month. And then from that, the minus 20 earned income disregard, the minus 65 earned income disregard, and divided by 2. After all those deductions are applied, Social Security is going to take the base maximum SSI cash benefit that she had been receiving. So we all know that that's $914 per year in 2023, and deduct from that $265.50. That's the remainder of the countable monthly net income from self-employment that we've determined after all those deductions are applied. And that leaves a remainder of $648.50, and that's the adjusted SSI cash benefit, okay? So what that means is, with projected earnings of $8,000 a year after all deductions, she's going to be entitled to a monthly SSI check of $648.50 per month, okay? That calculation seems pretty straightforward, right? Pretty easy. It's very similar to how Social Security looks at it for employees. This is where it gets to be a little unfair, and in my humble opinion, I think a little unfair to beneficiaries who are self-employed, because the way that the rules are set up and the way the POMS is set up in terms of counting income when somebody's on SSI and self-employed is that the adjusted SSI amount that a person is receiving applies to all months of the year, and it doesn't matter when that business started. So it doesn't matter if the business started at the beginning of the year in January or in June or in September. Social Security is going to look at it as a person had income for every month of the year, because they always divide by 12 regardless of whether or not the client had any profits from their earnings at that point. Okay, so let me give you an example of how that works. If the business started after January, and we said in this case it did, she's going to start working in, say, June. And overpayment is likely unavoidable if the business shows a profit. So even though she's only starting to work in June, because Social Security is required to look at all 12 months out of the year, what they're going to say is, between January and June, she should have had a countable income of $265.50 monthly that counted against the SSI check, and she received the whole $914. So what Social Security is going to say is that because she was receiving the full $914 between January and June, she was actually overpaid almost $1,600, $1,593. Okay. So even though she didn't have income during that period, Social Security, for the purposes of calculating her SSI check, is going to say that she did, because they're required to look at income for the whole year, and she's going to be overpaid almost $1,600, because they're going to take the monthly countable earnings, multiply by 6 for January to June, and that's how they figure out the overpayment. And the overpayments in self-employment cases are unavoidable. Again, not fair, not very beneficial to the client, but that's just the way that things work. The next thing I wanted to talk to you about is how Medicaid is impacted when somebody's on SSI and is self-employed. And the good news is that 1619B Medicaid is available to people who are self-employed just as it would be for somebody who was an employee working for somebody else. And even better news is that the 1619B eligibility policies is the exact same for a self-employment person as it would be for somebody working for somebody else as an employee. Okay, so there's no difference in terms of how Social Security looks at a self-employed person versus an employee for 1619B. Okay, now just as a refresher, I wanted to go through some of the criteria for 1619B. So when somebody is self-employed, Social Security is going to look at a couple different things. The annual accountable NESC, so what's left annually after all those deductions, as long as that is below the state threshold, which for 2023 in Virginia is just over $48,000, as long as that countable income is less than the state threshold, somebody is financially eligible for 1619B. Okay. Now, as you know, people who are employed can sometimes get an individual threshold if their earnings are higher, but they have like out-of-pocket expenses for home care or out-of-pocket expenses for money that they're putting into a PASS plan. Social Security actually lets people earn more over that threshold and keep their Medicaid if they have those kind of out-of-pocket expenses. The same is true for a self-employed individual. Okay. Self-employed individuals can receive an individualized threshold if they have those kind of out-of-pocket expenses. But as a general rule, as long as the annual countable NESC is less than the Virginia state threshold, they're financially eligible for 1619B. Okay. And just like an employee, they must pass the Medicaid need test. So that means that they need Medicaid in order to work. They have to still have a disabling condition per Social Security's definition. So again, just as a refresher, that means that they have to have a disability that's expected to last at least 12 months or end in death. So something that Social Security considers at least permanent for a year. And they have to meet all the other SSI eligibility requirements apart from their earnings. So in other words, and as you all know, if you've been a WISA for a while or a counselor for a while, that means that countable resources, like money that's not excluded in an ABLE account or a trust, have to be under $2,000. That's money that's like in a regular checking or savings account. Their earned income has to be within the SSI guidelines, and they have to still have a disability. Okay, so in order to be eligible for 1619B, the same as an employee, they have to otherwise be eligible for SSI if not for their earnings. Okay, and they have to meet the prerequisite month criteria as well, which means that they've received a cash benefit for at least 1 month within the past 12. Okay, so as long as the person's countable net earnings from self-employment is below the threshold, or they can establish an individualized one, as long as they need Medicaid in order to work, and as long as they're still disabled under Social Security rules and would otherwise be eligible for Medicaid, if not for that income that they were generating from self-employment, they're going to be eligible for that 1619B work incentive. Okay, when those self-employment earnings cause the SSI to go to zero. If you go back to our example where the person's projected income was $8,000, obviously, she wasn't making enough to make this SSI zero out. She was getting just about $650 every month in SSI. So in her case, 1619B wouldn't be needed. But you might run into situations where a person's projected profit is going to be higher than that. SSI is going to go to zero, and 1619B would be needed. And if you're at all familiar with 1619B and how to request it, there's 2 letters that are required. 1619B is requested in writing. The first letter goes to the client's local Social Security office, and Social Security is responsible for determining that the client meets all the eligibility criteria for 1619B, And the second letter goes to the client's Medicaid worker at their local Department of Social Services, just alerting the Medicaid worker that the client's SSI is going to go to 0 because of their earnings and they want to be evaluated for 1619B. Okay. Social Security will make the determination that a client meets all the criteria for 1619B, and that information gets shared with the client's local DSS office via the state data exchange. So Social Security will determine eligibility, share that eligibility determination with the client's local Medicaid office, and then the Medicaid office is going to be responsible for coding the client in their system as 1619B eligible to prevent any lapses in coverage. Okay, so it doesn't matter if a person is self-employed or an employee when it comes to looking at whether they're eligible for 1619B, and you as a WISA would help them request 1619B in the exact same way that you would as if they were an employee working for somebody else. So just keep in mind that when it comes to work incentives, there is no difference in terms of how that individual is treated. Just wanted to talk to you for a quick minute about Virginia's Medicaid Works or Medicaid buy-in program. And Medicaid Works, just like 1619B, is also available for people who are self-employed, just as it would be for an employee, okay? And regardless of whether a person is an employee working for somebody else or a person who's self-employed, DMAS is required by law to use the same countable income calculations for self-employment cases as Social Security is, okay? So they're going to apply all the same deductions that Social Security would to determine an SSI check when determining how much income is countable for Medicaid Works. So they're going to deduct things like the standard NESC deduction that I went through. They're going to deduct the first $20 of any unearned income, deduct $65 of wages, divide that in half, okay? So all the same exclusions that Social Security would apply to an SSI check, DMS is also going to apply to determining countable income for Medicaid Works purposes. So just keep that in mind. Remember that individuals who are receiving SSI or are on 1619B at the time that they request enrollment in Medicaid Works are deemed financially eligible for Medicaid Works at application, okay? So if a person is on SSI or 1619B, regardless of whether or not they're an employee or self-employed, they're going to be deemed financially eligible for Medicaid Works, okay, at the time that they apply for it. If a person is not receiving either one of those benefits, they're going to have to go through a countable income test and a resource test, okay? So other people who are not on SSI or 1619B at the time they apply, they have to have a countable income of no more than $1,677 per month for 2023. Again, countable income is determined by applying all the standard income exclusions that Social Security would apply to an SSI check, and non-exempt resources of $2,000 at the time the client applies, okay? So that doesn't include resources that are put into things like an ABLE account or a special needs trust. Non-exempt resources, DMS is going to be looking at things like what a person has in a checking account or savings account. Non-exempt resources can exceed $2,000 at the time that the client applies, okay? So countable income of $1,677 or less, and non-exempt resources of under $2,000 at the time a client applies would make them financially eligible for Medicaid Works. Same as it would be for an employee, okay? Now, I can't say enough about how underutilized and invaluable Virginia's Medicaid Works program is, because obviously the income and resource guidelines are going to be much higher on Medicaid Works as they would be for somebody on 1619B. So it's just as advantageous for a person who's self-employed, even if they're on 1619B, to pursue Medicaid Works because they have the potential to make a lot more money and save a lot more in resources than they would be like on 1619B. So as you know, if you've been a WISA for a while, that once a client is found financially eligible for Medicaid Works at application, they're employed, whether they're an employee or self-employed, they meet all the criteria, they can have countable earnings of up to $75,000 per year and have resources up to the 1619B income limit. Okay, so keep in mind that the earnings limit for 1619B and the resource limit for Medicaid Works is the same. Okay, so people can have a countable income of up to $75,000 per year and resources up to just about $48,000 and still keep their Medicaid coverage under Medicaid Works as they work. Okay. Now, unfortunately, a lot of you who are WISAs have told me stories about how you've tried to work with DMAS to get your clients enrolled in Medicaid Works. And a lot of representatives on the local level don't know what the program is, or they don't understand the eligibility criteria for it. So if you're running into eligibility issues with enrolling your folks in Medicaid Works, I want to know about those things. I'll do my best to work with DMAS to try to help you resolve those things and link you up with the right contacts that can help you resolve those kind of enrollment issues. But people who are on 1619B should not be discouraged from applying for Medicaid Works. As a matter of fact, again, it's a lot more advantageous to get enrolled in Medicaid Works if somebody's self-employed too, just because they have higher earnings and resource potential once they can get their foot in the door. For counselors, if you're a counselor listening to this, remember that helping a client enroll in Virginia's Medicaid Works program is a billable WISA service, and for the closed captioning that's going to accompany this, it's WISA. The procedure code is A3012 in AWARE, and you can actually authorize a WISA, a WISA, to help a client enroll in Medicaid Works. And the reason why we made this a billable service is because there's a lot of work involved with helping the clients submit the Medicaid Works agreement, open up that work incentives account, advocate with social services to ensure that the Medicaid Works program enrollment request is actually approved by social services. Often there's a lot of advocacy needed on the part of that WISA to help a client submit all that paperwork and ensure timely processing of it. So keep in mind, if you're a counselor, that Medicaid Works is a billable WISA service. And so if you have a client that wants more information about Medicaid Works or is maybe interested in enrolling and needs help, keep in mind that you can authorize Medicaid Works to a WISA to help a client do that process. And more often than not, advocacy is going to be needed to ensure processing of that application, just because that through a lack of training, the workers at the local social services office either might not know what Medicaid Works is or not be familiar with the enrollment criteria, and so often it's going to take some advocacy on behalf of a WISA to ensure timely processing of those requests. Last thing I wanted to talk about before we wrap up today is to give you some reminders about annual net earnings from self-employment and some pointers that you can give to your clients who may be self-employed and receiving SSI and have questions about reporting income to Social Security and things of that nature. So just as a reminder of what we talked about, remember that whether we like it or not, if somebody is on SSI and they're self-employed, Social Security is always going to use the annual net earnings from self-employment projection the client puts down on that 820 form, that work activity self-employment form, to calculate several things. Okay, so they're going to use that to calculate how much of the annual earnings should count against the SSI monthly. From that, they're going to determine the countable income. So again, deduct the value of any work incentives that the client might be using. They're going to take off the $20 general income exclusion, the $65 earned income exclusion, divide that by 2. and subtract that from the federal benefit rate to get the adjusted SSI cash benefit. And then the projected earnings are also going to be used to determine eligibility for Medicaid. So they're going to use those to determine whether or not the client's countable income is within that 1619B income threshold, or if they qualify for Medicaid works. So what a person puts down on that 820 form when they begin working is extremely important. And it's tricky because obviously in the very beginning, they're not going to have a pay stub like an employee would to show what they earn monthly. They're not going to have any profit and loss statements yet or tax returns to show their actual profit. So in that first year, all the client can really do is project how much they can expect to earn in that business for the first year that they work it. And Social Security is going to have to use that to determine the impact of SSI, or on SSI rather. So my advice to you as a WISA, if you're listening to this, or maybe even as a VR counselor, if you get this question, is if a client has questions about how to report their earnings to Social Security, my best advice is to get out that 840 form, or 820 form rather, and fill it out with the projected annual net earnings from self-employment. Project income as accurately as possible, but my best advice is to don't overproject. And what I mean by that is, if you have a client who's starting out a business, you don't want to put down that they're going to make $5,000 a month as a projected profit, because number one, that's not very likely for a start-out business. And number two, remember that whatever is put down on that form is going to be used to determine the impact of that income on their SSI check every month. So if you project too high at the beginning and the client doesn't earn that income, regardless of whether they earn it or not, that figure that they put down in that form is still going to be used to determine the SSI payment. So if you project too high, the SSI could go to zero, okay, whether the client's earning that income or not. Remember, in self-employment cases, it's all about projected earnings, especially for that first year when projections is all the client has. Okay, so if you project low, the client may have an overpayment, but if you project too high and that SSI goes to zero before the client's actually earning any of those profits, that could be a problem for them too. Again, in self-employment cases, projecting low can result in unavoidable overpayments. And in my opinion, and this is just my opinion, I think one of the downsides to self-employment is that it's harder to avoid those overpayments using the projected earnings as it would be for an employee who, for example, has a pay stub, and Social Security can use that wage information to project, what their gross earnings are every month. It's easier for Social Security to determine like exact earnings when somebody is an employee versus using a projection for profits when somebody is self-employed. So, one of the downsides to self-employment is the possibility of overpayments if the projected profits they put down is too low. The good news is that if projections are higher than a client actually makes in profits at the end of the year, they might actually have an underpayment where Social Security owes them money, okay? Because the profits that the Social Security used to calculate the monthly SSI were actually higher than what the client actually earned at the end of the year. You can go back and request that Social Security reconfigure the SSI check on a monthly basis, and Social Security might actually owe the client money. So just keep that in mind, that if the projection on the 820 form is too high, then there could be an overpayment, but if it's too low, there could be an underpayment, okay? And that gets really tricky. It's a lot easier after that first year to report earnings to Social Security, because by then the client would have profit and loss statements, My recommendation to folks is always to keep monthly records of profit and loss statements per month. That's something that after the first year the client works, they're in business, they actually have a paper trail of monthly records to report to Social Security to show this is what I earned in the month, these were my expenses, this is my net profit. It's always a good idea for clients to keep monthly profit and loss statements. It's just a way to make sure that the SSI calculations are accurate. And also, after that first year and the client starts filing tax returns, they can also use tax returns and submit those to Social Security at the end of the year to show what the net profits was. Okay, so using those profit and loss statements and tax returns once they're available, it makes it a little bit easier to calculate an accurate SSI check going forward. But in that first year, when none of that stuff is available, it is a little bit harder to make sure an SSI check is accurate, just because all the client has is projected earnings, and that's really all they can go on. But my advice is to, once the business gets going, keep those accurate monthly profit and loss statements. Also, make sure the client files their taxes every year, and they can use both the monthly profit and loss statements and tax returns at the end of the year, report those to the Social Security Administration, and then Social Security from there, using that information from the tax return and the client's records, can calculate whether or not the client is actually overpaid and underpaid in SSI for that year, and they can kind of recalculate what the client was paid in SSI based on those records. Okay, so just as I would suggest for an employee, the key to accurate wage reporting for a self-employed person is keeping accurate records. Make sure they keep profit and loss statements and tax returns, and report that to Social Security on a regular basis. Okay. As always, the ways that a client can report wages are the same as they would for an employee, including reporting in person. If a client reports their self-employed income in person, what I would suggest is doing so on the SSA 820 form. Make a copy of that form for the client's records, and then make sure they get a receipt. That just verifies that they did report their work activity to Social Security if it's ever questioned. Can also report that income by certified mail. They can mail in the 820. I recommend sending the report certified, because that way Social Security has to sign for the package. That's the verification that Social Security got the wage report if it's ever questioned. Again, when mailing things in, I recommend that the client saves a copy of anything that they mail in, as well as any information that Social Security might send them back in response to that report that they made. Once the business is going, they can report using their myssa.gov account if the local office they're working with uses that system. The client should check with their local SSA representative to determine if myssa.gov can be used to report. But if they have business expenses and work incentives that they're using that need to be reported also, my best advice is to either report in person or by certified mail, because you can't use the myssa.gov to report the use of things like work incentives. It makes it easier to keep track of what the client's earnings are and work incentives used if number one, the client keeps accurate records and reports in person or certified mail, because that way, if a client does need to request something like 1619B, they can hand the representatives a copy of that 1619B request with their wage report. The same thing with social services. If they wanted to request Medicaid works, they could, for example, attach a copy of their profit and loss statements or their tax return with the Medicaid works agreement, that requests the Medicaid works send everything in together. That makes processing of the work incentives request a little easier. And again, that's not something that can be done online. So if a person has work incentives that they use or that could apply, my best advice is to always report in person or by certified mail, attaching the work incentives request to it. Okay? I thank you for your time, attendance today, and stay tuned for details on the SSDI webinar coming in July. Thank you, everyone.